And here coming down the stairs is our new friend from AcreTrader, but more importantly, from Northwest Arkansas, my friend Carter Malloy. How are you, man?
Hey, wonderful. Thanks for having me in the basement.
Well, I'm so happy that you're here. How did you guys decide that buying farmland was the type of investing that you personally wanted to do?
Sure. So I spent the previous dozen or so years of my career in the investment industry. Most recently, the last 5 years before AcreTrader, I was a partner at a $1 billion equity hedge fund. But basically, I've spent my time through most of my career looking for good long-term investments. With the fund, I was living out in San Francisco at the time. My neighbor was a successful technology entrepreneur, and he was asking me, he knew I was from Arkansas, and was asking me how to invest in farmland. You know, he wanted to put some money there. He had read something about it having been such a good historical asset class and didn't know how to. And on my end, I had grown up on a farming family. My dad and I had been successfully buying and selling farmland in recent years there. And so after he asked me, I started doing some research into looking at the asset as a whole, as opposed to just my personal on the ground experience with it. And as I started digging deeper into the asset, I discovered that despite my dad and I thinking we were smart, astute investors and buyers and sellers of farmland, that actually most people investing in farmland, including the farmers, had actually seen like really great historical returns. And so now today where we are looking at the overall asset class, there's something like $30 billion of private equity money invested in it. And then there's really smart people out there like Bill Gates that have identified and are investing against this trend. But despite there being like trillions of dollars of farmland in the United States, there's no real attractive way for most people to invest in it.
That was actually my next question, because OG and I had this debate on a recent show, Carter, which is, if something's a great investment class, but most individuals aren't doing it, like what's holding them back? And clearly with farmland, there's got to be something holding them back.
Yeah, it's just access. You know, I think for funds, if you want to go invest in a farmland fund, a private equity fund, you know, it's typically $1 million minimum and a 10-year lock on your money. Most people that you and I have ever met, that's a non-starter. You know, even for people that have that type of money, it's a non-starter. So, yeah, I think that's exactly was when the light bulb sort of went off for me and for our team is, you know, we stepped back and said, wow, here's this asset's returning 12% historically with far lower volatility than most other similar assets out there. We've actually got some great information on our site on the For Investors section of our website at acretrader.com. It's really surprising when you step back and look at this asset. It's been performing so well over such a long time period in a very stable manner. And there's a ton of it out there, but there's just no one really bringing it to market to the masses. So ultimately, I teamed up with some lawyers, some farm managers, some technologists, and we built a business plan that would turn into AcreTrader. So fast forward to today, we're now live. The site's up and launched, and we're working on millions of dollars in deals. We've got an online portal where investors can go on there and sign up and start investing in farmland in under 5 minutes and with as little as $1,000.
I want to get to how that works in just a second. But before we do that, there was a piece that mentioned you guys recently in Forbes talking about where this asset class fits. And you do a good job of talking about how this may be a great gold substitute. Like if you've got precious metals in your portfolio, how, I don't know, is it the risk profile? Is it the volatility profile? Tell me about farmland versus precious metals.
Sure. Yeah, it's a great question. So that's part of the reason we're so excited about this asset class is I think, you know, you can go stack it up against individual other assets and it really outperforms them. But I think the thing that probably resonates the most easily is looking at it against gold. You know, there's $8 trillion of gold in the world, and a lot of people have it in their portfolios as an inflation hedge and just something that's non-correlated. And that's why we wrote the article in Forbes, is because I think when you step back, you go, why would you own gold when farmland gives you a lot of the same portfolio protection characteristics, but does it in a much better fashion with far better historical investment performance. And oh, by the way, it pays you a dividend, right? The farmer pays you rent. So yeah, I think that's exactly it.
You guys don't even correlate differently against, you know, stocks and bonds and that type of thing, but you have not a lot of correlation with rental real estate, residential real estate, or with commercial real estate, is my understanding.
Yeah, it's sort of its own beast. And what's fascinating is there's not big swings in the price of it either, right? And so like against the S&P, the correlation is literally almost zero. There's no positive or negative correlation. With inflation, there is some correlation. It actually correlates better than gold, right? So it actually outperforms gold just a little bit when looking at a pure inflation hedge. But yeah, you're right. It's just its own unique asset, and you make money two ways, right? One, the farmland appreciates annually over time, and two, the farmer pays you rent. And so that's something we have to clarify a lot. So I think there's a misunderstanding. We're not farmers, and we're not asking the investors to be farmers, right? You go out and you hold the farmland, and the farmer pays you cash rent once a year. That's typically paid before they even plant. So you get a cash rent, one check per year in March, and we pay out an annual dividend at AcreTrader. So unlike in commercial real estate or residential real estate, which is probably the closest proxy, but over there you're chasing monthly payments, vacancies, you got problems all the time, things break. But with farmland, your occupancy rates tend to be close to 100%, and your default rates tend to be close to zero.
Well, yeah. I mean, I was thinking about this myself before you and I talked. I'm thinking that, farming can be so volatile. You just want to make sure the farmer doesn't go out of business. As long as the farmer doesn't go out of business and keeps paying the rent, you're good. You're not on this swing of, corn prices or livestock prices or whatever it might be. You don't have to pay much attention to any of that. It's more about, are they going to pay the rent bill?
That's correct. The farmer bears the risk. Now, what's really fascinating is the government backstops the farmers, right? So unlike in a commercial, or residential real estate building, where you have all kinds of defaults and volatility with the tenants, or bankruptcies, typically the farmers have insurance on their crops, and they're backstopped by the government.
Let's dig into how it works then. You said a minimum investment is $1,000. You have to be an accredited investor at this point?
At this point, we are working a couple of products that we'll have live this year, or anticipate having live this year, that will allow in non-accredited investors as well. So we still allow non-accredited investors to come on the site, create an account, and begin the educational process, which we've tried to simplify and put as straightforward as possible.
Got you. And then you take each of these properties, and if you go to AcreTrader, you can look at the properties. I'm looking at properties right now is it called? It's so funny, Kankakee.
You got it.
Damn. Every time I drive through there, by the way, south of Chicago, every time I drive through there, I'm like, I'm not sure I got that. In Monroe, Arkansas, close to where you live and not far from where I used to live, and in Tunica, Mississippi. So you've got 3 up here now. You show a few different things. It's called the AT relative risk profile. What's that?
Sure. On that, what we want to show is relative risk to other farmland. So you can see in the investment performance on the For Investors piece of the website, you can see that the relative risk to other asset classes, that being real estate, the S&P, REITs, things like that, the relative risk tends to be lower.
Yeah.
But we built that risk score so that you can understand it's always risk versus reward, right? So the investors can go in there and understand, like the Kankakee farm has a wind turbine on it. And so even though it's a 30-year lease with 2 10-year renewals on it, we consider that to be non-core farming. And so it adds a little bit to the risk profile. If the farm were to have debt on it, then that would increase the risk profile as well. Though typically, almost always actually, we do not have any debt on the farm. And by the way, I want to return to that. When I said farmland historically had returned 12%, it did that without debt. So this is typically a non-levered investment asset, which is pretty fascinating to consider, versus other forms of real estate where you've got 70, 80% of the value is debt to the bank.
Well, and I see too that even though that's historically been true, you don't set that out as an expectation either. I mean, I've seen some other things, and my long-term fans know probably the company I'm talking about that says that they're somehow creating these magical returns. So just because it does that, you're not setting that as an expectation.
No, we like to set expectations low and prefer to underpromise and overdeliver. I think that there's a lot of risk out there, right? When you see a 15% IRR on something, you should be concerned. You should wonder, what is this and what are my risks? Because leverage can be a really dangerous thing, especially leverage on speculative deals, right?
Yeah. Let's talk about, so if I'm an investor, then I get an annual dividend payment, which is a return of, I'm guessing, my percentage of the rent.
That's correct.
And then let's talk about exit, because obviously being in the ground, it's the same thing as a rental property. If I, want to take the family on vacation, I can't sell my bathroom only to get out of it. I mean, to some degree, I'm locked up. What's the exit strategy for an investor to have a return of principal?
Sure. So yeah, I want to step back a little bit just to discuss the structure of the deals.
Yeah. Okay.
Right. So as you were looking on the site there at AcreTrader, it's really pretty simple. We take each parcel of farmland. We put it in a unique LLC. So we've got a farm operations manager on staff that's managed a couple $100 million of farmland in his previous career. So understands dirt in a way